In a conference call with Wall Street analysts on November 20th, 2024, Nvidia CEO said the magic words. I'm going to discuss what those magic words were and what that means for Nvidia stock investors. Let's see.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right. In the conference call with Wall Street analyst, Nvidia CEO Jensen Huang said that demand exceeds supply and that demand is great and it's likely to continue for several consecutive quarters. Let's see why that's the case as the CEO explains what's driving that demand and what it could mean for investors. So Nvidia's CEO said, so the demand is really great. We're seeing inference really starting to scale up for our company. We are the largest inference platform in the world today because our installed base is so large. Blackwell's for training foundation models. It leads behind it a large installed base of extraordinary infrastructure for inference. We see the number of AI native companies continue to grow, and of course, we're starting to see enterprise adoption of AI in the latest rage. And so we're seeing a lot of demand coming from a lot of different places. And this is really music to investor ears. You love to hear demand being so strong, so diversified, broad base, and continuing to increase. And this is especially great for Nvidia because you've seen this now for 4, 5, 6, 7 consecutive quarters where demand is this strong. Nvidia keeps increasing supply and demand keeps growing faster than supply. And then Nvidia is feeding on a positive virtuous cycle where it continues to improve performance of its GPUs, which then makes these artificial intelligence capabilities more affordable, which then drives even more demand. And it's just feeding on itself. And it's really great to hear for Nvidia stock investors. The CEO continued to say that Blackwell production is in full steam. We will deliver this quarter more Blackwells than we had previously estimated. In this case, demand exceeds our supply. Demand exceeds our supply. The magic words that every investor loves to hear. And let me discuss why investors love to hear this. First of all, when demand exceeds supply, it means you're selling everything you're making. So you're generating your maximum revenue. And on top of that, when demand exceeds supply, you have the negotiating power against your customers. Customers are fighting to get your products because if you don't like the way your customer is negotiating with you, if you don't like the terms that they're offering, you can say, well, we're not going to sell it to you. We have somebody else waiting in line that's willing to give us the terms that we are asking to buy our products. So you either accept our terms at these prices with this delivery date, with this down payment, etc., or we'll go to the next customer. Take it or leave it. And it leaves the company in a strong negotiating position, as you can see evidenced by Nvidia's incredible profit margins. It's able to sell these. Not only is it selling these and selling out, but it's selling them at premium prices. It's one thing to sell out of your product if you're offering huge discounts and huge promotions so that you can sell out. It's another thing when you're selling out, even though you're selling them at super premium prices. And that's what Nvidia has been doing, selling out while selling their products at super premium prices that are driving industry leading profit margins. And the CEO talks about one of the really exciting areas is physical AI, AI that now understands the structure of the physical world. And so Blackwell demand is very strong and their execution is going well. And that's the other side of the story here is there's been several scenarios where companies have had demand explode like this, and they had difficulty in executing and meeting that demand. Because it's not easy to scale up your business to meet this rising demand, especially if you are selling physical products like Nvidia is selling. When you're selling software, like for instance, if you think about Netflix during the pandemic, when demand for Netflix soared because people were spending a lot of time at home and they wanted to consume content. NVIDIA is a digital, and Netflix is a digital product. So it wasn't constraining on Netflix, and it was able to grow and accept all those new customers very easily because it didn't have to send them anything. It didn't have to make anything new to send people. And so it was a really easy task. But when you're talking about physical products, that's another story. For instance, during the pandemic, when Peloton saw its demand explode higher, it faced all kinds of difficulties and the business nearly went bankrupt because of the adjustments it made to fulfill the rising demand. And then in the aftermath, when gyms reopened, it wasn't able to recalibrate itself to the smaller level. It's a difficult thing to do. It's not easy. NVIDIA is doing this masterfully, increasing its revenue. In the latest quarter, revenue increased by 100%. And we're talking billions of dollars, from revenue of around $15 billion or revenue of around $17 billion, all the way up to revenue of around $35 billion. So you're increasing revenue by roughly $15 billion year over year. Imagine all the products, all the logistics of creating and manufacturing that increase in supply to meet that demand. Not an easy thing to do. NVIDIA is saying that their execution is going well, despite these increasing degrees of difficulty to manage this type of growth. So it's a two-sided benefit. It's a two-sided story here for NVIDIA, and both sides are going very well. The CEO goes on to say and reiterate that they're on an annual roadmap and they're expecting to continue to execute on their annual roadmap. And they've said this for several quarters now, that every year they're going to launch an upgrade to the technology, and they continue to reiterate that. So that's another level of execution that's gone excellently for NVIDIA. They're reducing cost of training, and they're reducing the cost of inferencing, and they're reducing the cost of overall artificial intelligence so that it can be much more accessible. And of course, if you decrease the cost of something, then demand goes up because now it's more accessible to a broader customer base. And so it expands demand into more categories. And that's another leg, what I talked about earlier, in the positive virtuous cycle, just feeding on itself and driving this level of growth for NVIDIA. And he goes on to say that because our performance per watt is so good compared to anything out there, they generate for their customers the greatest possible revenues. And power consumption is becoming a critical element here in this AI story. The power consumption for artificial intelligence is much higher. And so when you have GPUs like NVIDIA's that perform better when measuring against the power consumption, that drives demand even more, because now not only do these companies that are buying NVIDIA's products have to consider the price they're paying to NVIDIA, they also have to consider the price of operation. How much is their all-in cost, the total cost of ownership with NVIDIA's new technology? And what they're finding is that their total cost of ownership is actually lower if they upgrade to NVIDIA's latest technology, because the power consumption is better and because the performance is better. They're seeing this as a no-brainer, and it's driving this growth for NVIDIA. So great to hear NVIDIA CEO say the magic words to NVIDIA investors: demand continues to exceed supply. Hopefully we'll keep hearing similar stories from NVIDIA CEO going forward. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.